Point, its stock is on a wild ride, trading at a market multiple that almost matches the S&P 500. So when normally it should be trading at a premium because it's a growth company still. And that raises the question, is Nvidia undervalued? Some are saying yes. Or is the market headed for a fall, for that market multiple to be lower? There's still a lot of regulatory risk for Nvidia. AI diffusion rules restricting chip exports to certain countries that would come into play this May. The possibility of further China bans, specifically the H20s. We talked about that yesterday, but just it is a big portion of their business to China.
After Q4 earnings, that's not justified, right? Like, but we're talking about some of those names, like Nvidia. It's like, oh, maybe they grow earnings only 65% of 70. I mean, come on, no? And then like, oh yeah, that needs to be 30% down. Really? On that kind of news? No, that's way, way, way overdone to me. So even in the Mag 7, even in tech, and then overall then obviously in the US, I think you want to buy that as well. It's not a point of buying Europe over the US, it's buying Europe and China and the US. It's actually really broadly where things are still pretty all right.
We will leave.
I think today, when you look at the rally that you had in Nvidia, yeah, it was just pressed down. It was down nearly 30% from those recent highs. It was a crowded trade. People got out of it, and people are going to be looking for opportunities to get back into both of them.
And I think we were correctly cautious since that January engulfing pattern across the desk, and that proved to be right. And today's the first day in terms of price action. You can actually make a case. You can play it from the long side. I'm not saying it's going straight up from here, but that 110 low to your earlier point, that was the low that we saw basically back in September on heavy volume, which is a good sign. So for me, for the first time in a while, Nvidia actually looked.
According to the Bloomberg Billionaires Index, Warren Buffett is the 10th richest person in the world with an estimated net worth of $155 billion. The astounding thing about Buffett's fortune is that he mostly made it through stock market investments. And he is the undisputed king of value investing due to his incredibly profitable investing approach. Growth investing and value investing are two diametrically opposed types of investing for many individuals. Buffett, however, was very explicit about his views on growth and value in his 1992 letter to Berkshire Hathaway shareholders. Growth is always a factor in determining value, he stated. A crucial investing principle is encapsulated in Buffett's witty quip. I can't think of a better example to demonstrate Buffett's statement than stock market darling Nvidia. It's a notion that investors should embrace and absorb to help them win in the market. Graphics processing units, GPUs, are Nvidia's main product. The company's GPUs, which were first designed for the video game industry, have grown in value for a number of applications, including cryptocurrency mining and more recently, artificial intelligence, AI applications. Additionally, the recent AI frenzy has elevated Nvidia stock to the top of investors' minds. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Tariff woes and weak economic data have driven volatility over the past few weeks. But just because the headline indices have given up all their year-to-date gains, this doesn't mean there isn't value to be found in the market. Joining me now to talk about that, we've got Michael Sonnenfeld. He is the founder and chairman of Tiger 21. It's a peer membership organization for ultra-high net worth investors. Michael, it's great to speak with you because you can give us such a great pulse on what the ultra-wealthy are thinking about this market. Just give me the headline here. How are you hearing investors talk about this kind of rise in pessimism we're seeing in the market versus where the market's currently at?
More turmoil and confusion than normal. It's a period of great volatility. And our members are not just ultra high net worth, they're all former entrepreneurs who have built businesses mostly from scratch. The overwhelming number of our 1,600 members are first generation wealth creators. So they've been creating wealth in the private markets primarily.
And talk to me about why value investing is being viewed as the right way to allocate capital right now.
So value is seen in a lot of different ways. Our asset allocation has over half of our members' assets, about $200 billion collectively, in private equity and private real estate. That's where members are finding a lot of value. We only have about a 23% exposure to the public equity and mostly in the ETF. But there's some trends that people notice. For instance, we had a low cash in the fourth quarter. The last time we had below 10%, it's 9% now. was in 2007. So it's a little reminiscent. Same thing happened with Berkshire Hathaway.
Right.
They have the highest cash now, and they had the highest cash right before 2007. You can look at housing starts as an indicator, or houses for sale. So there's a lot of indicators saying there's a rotation in the market out of growth and into value. You can play it on ETFs. You have the Russell 2000, you have IJS, but those are really defensive moves. The thing that our members know is if you're buying a company, forget the momentum. On average, look at the fundamentals. It's a company, you're buying a piece of it. How will it do? Our members are very meat and potatoes oriented of basics. And this is a time where basics are really going to shine through.
So it also sounds like you're saying it's a stock picker's market a little bit.
Well, it's always a stock picker's market if you can pick great stocks. But over the long term, the evidence is overwhelming that indexes in buying the market is the better play for the long term. Some people aren't thinking the long term, they're thinking the short term.
Right. Well, and it's interesting hearing you talk about small caps, but they are off their highs, down 15% today since November. So it is a challenging environment to find that value. I also heard you talk about private credit opportunities. How can retail investors play that area of the market?
Well, there are a number of publicly traded private credit companies. The BDCs in particular, Golub would be one that's widely held among Tiger members, but there are many. I think Blackstone has one and many others. So as a category, when you're talking about value investing, depending how you look at it, the fact that a loan is at a proportion of the value, you're already having the protection of the equity above the loan. So if you really want some downside protection, if you can get private credit where the credit is independent, meaning it's floating credit, not taking the interest rate risk, that might be a better play.
What's your highest conviction trade amid this policy uncertainty?
Staying away from the fads. Our members are in private credit, our members are in private real estate, anything that's sort of meat and potatoes. Apartment houses would be a good example.
I'm not hearing AI, I'm not hearing tech.
We have a huge exposure to AI. The Magnificent Seven has been on our radar for the last 3 years. Obviously, it's down about 10% this year. But when you say down 10%, it was up 60% last year. So it depends when you focus in that lens, how closely are you looking? And when our members get in our meetings and somebody says, well, it's down 10%, what should I do? They say, well, if you didn't know that it's a better deal when it's down 10%, you shouldn't own it in the first place. But if you look at a longer term perspective, the Magnificent Seven still have extraordinary franchises, even though there seems to be some sector rotation out of that.
I like that mentality. If you wouldn't buy the dip, then you're not high conviction enough to own that individual.
The stock of Nvidia was trading at a price-to-earnings (PE) ratio of 62 at the start of 2023, which seemed high. The majority of conventional value investors would be put off by such a high valuation. After all, according to YCharts, the S&P 500's PE ratio was roughly 22 at the time. Since Nvidia's stock was over 3 times more costly than this inflated average, some people thought the entire stock market was also overpriced at the time. With the advantage of hindsight, it is evident that Nvidia stock was a fantastic value at the time. Nvidia released its final financial results for fiscal 2025, which concluded on January 26th. On February 26th, the company's profits per share (EPS) for the previous year were $2.94. Nvidia was valued at less than 5 times the fiscal 2025 earnings it recently revealed at the start of 2023, when its share price was $14.50, split adjusted. To put it another way, a lot of value investors probably would have rejected Nvidia's stock because of its high price, but this conventional method of value investing ignores growth. And growth is a key factor in the value equation, as Buffett clarified in his 1992 letter to shareholders. To emphasize this point, let's look at Nvidia's expansion. In fiscal 2023, the company's split-adjusted earnings per share, EPS, was a meager 0.17. In just 2 years, its profits had increased 17 times. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Potentially more of a structural shift. Now, concerns, of course, are piling up. You've been talking about it all morning. There's CapEx and efficiency questions, the threat of an expanded chip ban, and now, of course, these new China tariffs. Now, Nvidia is the poster child of this unwind, but it is hitting AI and tech more broadly. The SMH Semi ETF down nearly 10% this year, and all of the mega caps, except for Meta, are underwater. Now, here at the Palace Hotel, the CFOs of Alphabet and Microsoft, they're set to speak today. Nvidia's CFO, Colette Kress, she's set to speak tomorrow. The stakes really couldn't be higher, especially given this sell-off and concerns around the AI trade and tariffs. Key question, will they hedge or temper language around CapEx as tariffs introduce new uncertainty? Some investors, like Dan Niles in your interview a few moments ago, they have expressed skepticism around these huge ramps in spend, saying that some level of digestion is needed. So could any of these CFOs allude to that in any way?
Josh, Kerry mentioned Nvidia being higher today. You know, that's been a pain point within the market. Bernstein's Stacey Rascon says valuations are looking increasingly attractive. They suggest that that stock has done historically well if you buy it at 25 times or lower. It's obviously had a huge pullback. We've suggested, well, you're not really going to get a better feeling market until the likes of Nvidia looks a little better in its own right.
I mean, there are so many green stocks right now that we should be talking to, like eBay, Alphabet, McDonald's. Like, these are pretty big market caps. But Scott, you're right. To that point, nothing is big enough to offset Nvidia. There's no 10 stocks that are big enough to offset Nvidia. So I do think it's important for maybe not necessarily overall volatility, but just for the indices to kind of find some support. You kind of have to have a name like Nvidia bottom and go green. Look, 26 times forward earnings with a 50% growth rate, a buyback, and arguably some of the best news flow of the year out of any stock still ahead, including a huge developers conference in March. Why wouldn't this stock be a buy here? So I agree with that sentiment. And, if I'm out looking for things to do, and I haven't done this yet, I would have it on the list.
Investors were more likely to recognize the alluring value proposition in Nvidia stock if they took into account the company's optimistic outlook while making their choice. In fairness, the company's stock has increased by more than 700% from the start of 2023. The remarkable ascent of Nvidia over the last 2 years serves as the ideal reminder that you should assess equities based on their potential financial performance rather than their historical performance. Renowned investor Bill Miller, who also described this strategy, said, "As I frequently remind our analysts, 100% of the information you have about a company represents the past and 100% of the value depends on the future. In the end, this also illustrates Buffett's point. Companies will evolve over time. Will their value increase or decrease? What changes can we expect in their growth prospects? Before purchasing a stock, buyers should respond to these kinds of inquiries. In actuality, investors will not be able to respond to this question for every company because different people have different levels of expertise in different industries. For this reason, Buffett advises investors to stick to their area of expertise. However, for the companies that investors are familiar with and understand, they can take their time estimating its value over the next 3, 5, or 10 years. Based on those long-term prospects, they can then determine whether a stock is attractively valued. By adopting this perspective, investors can prevent themselves from losing out on transformative prospects like Nvidia just because they appeared overpriced at the time. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.